Good morning, YouTube. This is TerrenceRe with a stock market update. Today, we're just gonna talk about. I'm gonna do a little charting. We're gonna go over some key levels in the market that I see, and we're gonna talk a little bit about Fibonacci retracements and that and a whole lot more right after the buffer. So right now we got the S&P 500, the SPOOs are up about 15 handles. We got the NASDAQ futures. It's up about a little over 1%. It's up about 193 handles. The Dow futures are pretty much flat. You see they're showing red, and the Russell futures are basically flat as well. The bonds are down, the notes are down. Well, we got oil is up almost 4%, and gold is making a little rally. We got Bitcoin down 1%. The financials are down and energy is down as well. So we kind of got like a mixed bag right now, which is what I expect for the rest of the day. I've already been chopped trying to do a little bit of scalping. Had a little small loss, about 57 bucks on the scalp. Now this right here, this NASDAQ position, this is a short call spread that I currently have on. And I still got about, 28 days on it. And I'm thinking about putting another position on during this video. We'll see what happened, see what I think as I run through things. So basically, I said we're going to talk about Fibonacci retracements. So let's get to it. So looking at what I want to look at, the best one, there's a lot of them on here that I have tried it up. Right now, you're looking at Apple, right? So I'm going to drop this down. If you look at from this high to this low. Matter of fact, I'm just going to take this off the screen. This is something that I do, how I look at levels. And you'll see that the market is bouncing between these levels, right? So I'm going to come from that high, come up here. Now I'm on Tastyworks trading platform. If you look at excuse me, the link down in the notes section of the video, you'll be able to click on it. And then you can open up an account with them. That's what I use. So you click on the top right here, drag down to this low, and you see where from high to low, right? Now I did this, I was doing this real time. I'm just going back. That's why I deleted it so you guys can see it. So when the market was here, I did it. And so it pulled back to the 618 retracement. Now I like to double click so I don't like all that color. I normally take off the 5 or 50% retracement, back that out. So it takes all that color out. And then I'll click on like prices so I can see the prices. And I like to have percent. So now that we got that on there, this is what it looks like. So you can see it pull right back to a perfect 61.8% retracement. That's a key Fibonacci level for people who keep up with that. So once it hit there, you can see the impulse move down. So we had like a one move or an A, B, B, C, C to D, right? So 1, 2, 3 move. And then it bounced and you had an up move, right? And so you had the same thing right here. You had low, high, high, low, hit right here, then boom, back down. So, but this particular move right here did not have that. It never pulled back. It just kind of hit right here, and then bounced all the way up. So the thing about that is this. So I'm already plotting over here, but you see where it came back and stopped at, right? Right here at this level. Then it came down and hit this level, and then we got a hammer candle. I'm not making this up. So now look and sit where we're at, right? So what I think, you never know anything, right? So what I think is this, is that we're going to get a down move right here. I don't know it for sure, but I think that we're going to get a down move. Here are the highs, 182.98, the all-time highs. Now, is Apple going to make a run for those all-time highs? If you think so, then you could play this breaking out to the top side. Like you could play this breaking out like, hey, man, this going to break out. And you could buy this right here. This is what I call like a great trading position to be in. Probably would have been better right here if you wanted to get long. But right here, for me, if you want to get short, this is a great trading position because you're going to know when you're wrong. Like I'm going to know when I'm wrong if I put a short call spread on right here, right? So if it takes out the high, then I automatically know that I'm wrong. So what I'm thinking is putting on another short call spread. I like to short these opportunities. Now, the same thing with Tesla. But Tesla doesn't its move doesn't look as clean, right? It has not hit that level yet. From you can see where it pulled back, touched that level, and then pulled back and went back down. But Tesla hasn't hit this part yet. Hasn't hit the part on the retracement. So I'm a little bit less inclined to short Tesla, even though it would be fun to do it. Now, the thing about it with Tesla is it's overbought on the RSI. So in my opinion, it's even better to short Tesla just because it's overbought on the RSI than it would be to do Apple. So the thing about it, Tesla has earnings coming up. So Tesla could blow through this. It's one of those stocks that it's almost like a meme stock. And in the when I say that, I mean it like that people are traded and get long just because being a fanboy or fangirl or whatever, right? And I'm sure you guys heard the news of Elon Musk took a nice size stake in Twitter. So if you hear, let's look at Twitter. And I'll come back to that just to show you guys it has nothing to do with fundamentals. That news came out, he took a big stake in Twitter, and boom, you got a gap up. So it's not like I was talking to this with a colleague of mine, and I was just saying, like, look, it's overbought. So, and I was like, man, this don't have anything to do with anything. The market is just, I think, I can't prove this, but our market is being ran by algorithms. Hedge funds have algos. These big trading groups, they have algos, and the algos are trained to, make trades when they hear certain things in the market. You got algos now that can trade off of news, and people are doing it too. So I don't really buy into the fundamental stuff, even though I do believe that Tesla is if there's a such thing as a good company, I guess Tesla, Microsoft, Apple, Amazon, Google, and those are the ones I have on my watch list. They would be that. So I actually want to short Twitter. Just looking at it, being overbought on the RSI, looking at the MACD. Let's look at the MAC. Let's see if I did short this. If I came out 46 days, I don't know, bought the 50, sold the 48. I don't want to pay 107 for it though. Let's buy a put spread in here. I just don't know if and obviously I'm playing for a down move, but I don't want to pay. Let's see if I can get in here and short this. It's a $2 wide. Let's see if I can get in for $1. So right here, if I go over here, it's showing that the mid price is 110. I don't want to pay 110 for it. The most I pay for this put spread that I want to pay is 105. Let's see. Matter of fact, I don't even want to pay 105. And they're moving. See how they're moving it? I tell you what. I'm gonna put it at $1, and we'll see what happens. I'm not gonna chase it. So we'll leave it at $1. And if I get filled while I'm in this video. And look, guys, I'm not shorting this because anything other than the fact that I just think that it's overextended, right? get this big gap over the next, I'm saying over the next 40 something days, it's going to pull down the close in on this gap. If we go, let's look at it on intraday. Let's look at it on the 30 minute. Got to be overbought on the 30 minute. If it's like that on the daily, look at it. That I just don't see it sustaining this. I don't think it can sustain this for 46 days. I really want to be in this trade, but I'm not willing to pay. What's another way? If I were to buy the 49, I don't want to buy the 49 and sell the 47. I would need a bigger move. So we'll just sit with it like that. So let's get back to what I was saying. Get back to the Fibonacci. So if I get filled, you guys will hear it ring. Let's go back to Apple and let's talk Apple. So let's look and see. The thing is, do we think that Apple can take out that high? Will these levels hold? Will this level hold over here? So if I was to short it, I'm gonna watch this all day. I'm not gonna put the trade on right now. I'm gonna watch it all day and see if it takes out this high. If it takes out this high, then I won't look to short it, right? But if I see it pull down and kind of like give me like a consolidation pattern up here, then maybe I'll look to short by the end of the day. So that's that with that. But these, as you can see though, these Fibonacci levels, I always go from a low to a high. These Fibonacci levels, they hold. So, I'll do a post on YouTube if I get filled on that Twitter position. Once again, all I'm doing, maybe I should talk through it just in case people don't understand. I'm doing basically a long put spread, right? In the money, out of the money, or in and out spread, however you want to call it. I'm on the put side, so that means I'm taking a bet that Twitter is going to go down from where it's at. So I bought this put and then sold this put. That's a $2 wide spread. So I don't want to pay more than a buck, right? Risk a buck, make a buck. And I'm not even going to try to make the whole buck. More than likely, I'm going to try to capture about 50% of that. And I'll show you, I'm going to pull it up again. So if I click right here, you see where it says it's green, buy. I'm clicking on the ask, and then I sell the bid. So this is a box, as I was taught. 48, 49, 50, that's $2, right? This is the box. If I pay a buck for the box spread, right? That's going to leave what? Another buck that I can make. And as you guys can see, my probability of profit on this trade is 54%. Probability of making 50% on this trade, you see it moving around 66, 67. So this is a high probability trade. If you do these over a long period of time, you should be profitable. Should be. And you can see it bouncing around. It's at 107. So this is what I'm going to do because I really want to. I'm going to work this. I'm gonna set it at 105 and then I'm gonna leave it. I'll go 5 beyond what I want to do. And we're gonna leave it here. We're gonna leave it at 105. If I get filled, I'll post it on YouTube. So now you can make posts on YouTube. So follow me. If you guys aren't subscribed to the channel, that way you'll see if I got filled or not. Only be comfortable. I'm comfortable with if I take this loss, right? If I lose $105, I'm comfortable with that. So if you can't stand to lose $105, don't take this trade, right? It's a real good chance that that it could run away, right? It could just keep running. It may even pull back a little bit and then take off some more. So that very well can happen. Looks like the NASDAQ is breaking out to the top a little bit more. So it's going up. So let's look at Apple. Looks like Apple is going to take out this high. So this if Apple takes out this high right here, then I do think that the market is going to continue to go higher. it takes out this high, then I may look to get long. And because I'll trade either way. I'm not just a bear. If it takes this high out, then I would look to get long for it to take out the all-time highs. We got a market. Then at that point, I will say that this market is back on this bullish mark and this bullish roll. So at that point, you got to roll with, trade the market, trade what you see. That's a good book too. I read, I can't remember the author, but the name of the book was Trade What You See. So I'm not trading my sentiment or what I think. Like, I think the market should be going down. We got, we got a housing bubble. Houses are the highest that they've been, I think, ever. I think I seen a statistic saying that the median house is $500,000, right? It's the highest ever. So the Fed, so we got inflation, gas is high, we got a war, we got rumors of wars, we got shortages on chips. You got Ford plants closed down, you got GM plants closed down, but the market is going high. Somebody's buying this stuff. I don't know who it is, right? Someone is actually buying Tesla at 11.29. When Elon Musk, back in, if we go, what was it, back around here somewhere, when it went up over, well, it was back here somewhere, when he said it was like right around like 160 or something, and he came out and said that it was overpriced. So he said it was overpriced back here. So you got Netflix, a $388 streaming service. This is crazy. So look, who am I, right? So I think it should be down. But look, if it's not down, I'm gonna trade it while it's going up. So like if Apple takes out, like I said, Apple takes out that high. This is a weekly chart. I'm gonna go back to the daily. If Apple takes out these highs, if Apple takes this high out, it's gonna take out the all-time high. If it's gonna reverse, it's gonna do it right here with this double top. If it's gonna reverse, same thing. Tesla got a gap though, so I do think that, see this gap right here, I do think that Tesla's gonna come back and I do think that Tesla's gonna come back here at some point and fill this gap. So watch for that, and then that'll either be support or resistance after it comes back. So even if Tesla makes this high, it will come back and see this gap. And then let me see if I can try. I want to go ahead and draw this gap, put this in here. See this right here. Tesla will come back to this at some point. It's either going to come back to here before it takes out the highs and then bounce, or it's going to take out the highs, and then as it's coming back down through here, it's going to test this. It'll come back and fill this gap. So with that, you guys, I hope you got something out of this video. Hit the like button, hit the subscribe, share. Throw some stocks in the comments that you guys looking at, that you trading, so I can look at it too. Share some of that money. And with that, I'm out. Peace.